welcome to Money, Money, Money. It's that sparkling time of the year again. Diwali is just a few days away, which is why we've been bringing you the festive series on Money, Money, Money. And this week, it's time to turn the spotlight on the shiny yellow metal. Yes, gold, which is why we're actually here at the Tanish store in Bandra West. The question is gold really worth the investment? Is it worth your time, your energy, your effort, and most importantly, your money? Will it fetch you handsome returns? It's been a great year for gold investors. Will that trend continue? To help us answer most of those questions, we've got two special guests joining us on the show. Of course, our personal finance expert, Roongta, is with us. Harsh, great to have you on the show as always. And also we have Chirag Mehta of Quantum AMC. Chirag, welcome to the show. So, I'll start with the basics first. Price trend-wise, it's been a fabulous year for gold, right? Though we're off, 7-8% from the peak. Nevertheless, we're talking about an appreciation of almost 19 to 20%. Do you expect that to continue?
See, it was given that gold price has been suppressed for last 3-4 years on a continuous basis. Now gold has moved up after the first Fed rate hike that was. So it was speculation driving gold lower, that Fed rate hike is going to come, and eventually when it came, gold started moving up. So we are out of speculation, back to fundamentals, and that is why gold prices are going up. If you see the factors driving gold are central bank policy making, lower rates for a longer period, negative rates now. So that is creating a big backlash against policy making. People are fearful, there's more uncertainty, and that is why gold is in demand.
But what explains the recent price drop, this decline that we've seen in the past few weeks?
Again, it's the Fed rate hike talks. The chatter behind the Fed rate hikes is moving up and causing more uncertainty and speculation driving gold prices down.
So the dollar moves higher, and therefore usually the dollar and gold are inversely correlated, right?
Yes.
Yeah.
So Fed has to save face now, because they have, at the start of the year, they said 4 rate hikes. Now they are down to 2 and now to 1. So last 3 months, if they don't hike rates now, they're going to lose face and credibility with the investors.
Okay, so now that's a lot about the central bank movement and the overall speculation in the market. What about real demand and supply? How do you view how global ETFs, gold ETFs are doing? Is money still coming in? And how does one view demand? Because India's demand has been going down. We've been importing less gold in the last couple of months.
So in the gold market, it's usually a two-hand approach. One is the investment demand, one is the physical demand. Physical demand usually serves as a floor to gold prices, and investment demand is what takes the gold prices up. This year we had the investment demand in full swing and physical demand mediocre or lower. That is why India has not participated much. So we think there are few reasons why Indian demand has been lower. One is unofficial gold imports coming in, real interest rates positive in India. That's a big positive. People moving from physical assets like real estate and gold to financial assets, and that's why demand is lower. So we think demand will come. People are becoming comfortable with prices at these kind of levels. Whenever we have volatility in prices, people shy away from buying gold. So now with prices stabilizing at these levels, I think demand for gold is going to be much larger, and this Diwali is going to be a very good Diwali for gold markets.
Okay, all right. So Harsh, let me get you in the conversation as well. From a personal finance angle, what's the importance of gold in the portfolio? How much gold should you have? What's the thumb rule? I mean, do you go by age? Do you go by your investment horizon or your investment objectives? How do you decide?
So, I mean, if you were to talk about gold, I mean, you might as well talk about equity, you might as well talk about debt. I think every asset class has its place in an investor's portfolio. In India, if we pick up India and we talk of a normal investor, definitely gold should be part of his portfolio, if for nothing else. The fact that eventually we will use gold for social things. I mean, your kids are going to get married. So, I mean, because there is a social use of that gold.
I like that term, social use. I think in the Indian context you hear that the gold has a social use, very much so.
Absolutely, it's not really an investment. If you give that, I think doing a 5-10% allocation to gold. So it's like any other allocation. Decide your allocation, right? If you're bullish on gold, maybe that's 10%. Okay. If you're not that bullish, it still needs to be 5%. Okay. The key is how you build it. I think this thing about, for a normal investor, this thing about the factors that affect the day-to-day price for a normal investor who's investing for the long term.
And typically that's how Indian investors are. They're not really looking at very quick returns or quick trades in gold. In their gold
it's a buy it, keep it, forget it kind of an investment. If you're doing that, do you really want to bother about where interest rates are going, where equity rates are going? You look at, say, a much wider horizon. You look at 30 years, you look at 40 years. Okay? I mean, people look at 100 years. Their gold clearly, I mean, has proven as a hedge against inflation. Even after taking tax into account, you have very high single-digit returns in India, roughly 9.5% if you take tax into account and you take pure investment for a 10-year cycle.
So now let me ask you this. It's quite important to know that obviously gold has a place in the portfolio. The next critical question, does jewelry investment or do jewelry purchases equal gold investment, or do you need to invest over and above what you want to buy, in terms of your jewelry likes this Diwali?
So I think there are two things to that, both for and against. I think one is for most people, what is, say, core jewelry? I mean, we hear of jewelry being passed from generation to generation. That obviously is not an investment. You're never going to sell it unless literally somebody is dying and you need the money. You're never going to sell that jewelry. So that can hardly be called an investment. If you take that out, that's not investment. If you take the rest out, then there is only one way in which you can call it an investment, that say the current generation buys that jewelry, uses it, and then swaps it. Jewelry is very easily swappable, right? So you swap it, right, later when you want your children to use it, etc. Or you yourself want to change what you're wearing, and that's quite frequent. Just remember, it's a very inefficient
It's very
way.
inefficient, exactly.
The costs are huge. So it's a very inefficient way of investing. Of course.
Typically you'll end up losing, how much? If you're thinking that, you're going to mix a little bit of pleasure and investment by buying jewelry, then how high are the inefficiencies?
So I think there are two inefficiencies. One are the taxes and the making charges, right? And second is the undisclosed impurity. Okay, I think the second inefficiency is slowly vanishing with hallmarking, etc. coming in, which was a very major
cost.
cost.
A lot of large sellers coming into the market,
People like
Tanishq,
Tanishq, very clearly there is a huge amount of credibility attached to that. But the first inefficiency clearly remains. I mean, you take your jewelry out of the showroom, you want to bring it back and take cash, you're out 20-25%. So,
well, on that note, let's take a quick break, but we've only just gotten started. The question is, if you want to buy gold this Diwali, which are the best instruments you can look at? We're going to be breaking down the differences between the sovereign gold bonds as well as gold ETFs. What's the preferred route? Find out after the break.